So maybe you're starting out with a small account, which actually I respect. I think a lot of traders try and do too much too soon. I think starting out with a small account is the best way to start, because then if you make those big mistakes, which pretty much every new trader does, you minimize your damage. So today, I'm going to talk about the 7 tips to maximize your trading starting with a $1,000 account. Hey everyone, lead trainer with StocksToTrade, Tim Bohen here. Be sure to like, subscribe, and share these videos with your friends. You know, there's so much opportunity out there. There's so many trades out there. Cryptos, low priced, high priced stocks, futures, options. There's so much opportunity out there. If you know anybody that's interested in trading, I would love to have you share these videos with them, because hey, we put out so much free content here, whether it be the twist episodes with Matt, Jack, and Kyle, or the longer form podcast, or I go live every day in the pre-market prep. I'm really proud of what we do at StocksToTrade on the YouTube, on all the social media. It's a great free resource we love giving back. So that being said, let's talk about the 7 ways to maximize your trading under the PDT. So, or starting out with $1,000 and you're under the PDT, which is tip number 1. I got ahead of myself. Keep in mind, if you've got that smaller account, if you're under $25,000 in equity in your account and you're in the US, if you're overseas, congrats, because you're not bound by the PDT. But if you're in the US and you have under $25,000 in equity in your account, that means you're under the pattern day trader rule, which many of you know I think is quite possibly in a sea of illogical and moronic legislation in the U.S. government. I think the PDT rule might be the dumbest law ever implemented, but the simple fact is what it does is if you've got that small account, you're limited to 3 day trades. So, when we talk about day trade, that's a round trip, buying and selling a stock, the same stock in one trading day. You're limited to 3 of those day trades in a rolling 5-day period. Biggest reason I bring that up is you have to take that in consideration when you're trading with a small account and what it makes you do. Maybe the only benefit, and I use that word carefully, of the PDT is it makes you be very, very selective. So what you need to do is you need to be looking for those A+ setups, which you should be doing anyway, really. I mean, that's the one good thing about the PDT is that it does kind of teach you that rule of being very selective. So what we do in the Steady Trade team, which you can click below and check it out, it's a mentorship program. I do twice daily webinars. We have worksheets. You want to check every single box and be as selective as possible, because those day trades are precious. So that's the one benefit, and understand if you violate the PDT rule, because most brokers will, it's interesting the way they do it, but most brokers will let you make that 4th day trade, but then they'll limit you and you can't day trade for 90 days. So be very careful, understand you're under PDT, understand the rules. And, I went over it quickly. We've probably got 10 videos discussing the PDT. We talk about it a lot on the podcast. Investopedia, some great resources. Understand how the PDT works, because last thing I want in this amazing environment is you being locked out of your account for 90 days, missing opportunities. Next thing to remember is pick a good broker. One of the greatest things about the post-2019 era is the majority of brokers now are free or very low commission. And shop around. I mean, there's pros and cons. There's benefits to free brokers. Obviously, free is always good. People love low price, but at the same time, you might not be getting all of the, you might not be able to trade OTCs. One of the things with a small account, some of the best opportunities are in the OTCs. A stock like I'm looking at today, this BTSC is a crypto related stock. You see it's up 40%. It's holding VWAP, looking for this to break out in the afternoon. This is a potential, what we call that OTC swizzle play that the guys on the twist talk about a lot. I mean, this is setting up for that this afternoon. So keep in mind, a lot of the free brokers might not let you trade OTCs, which are one of the best ways to grow a really small account. So if you got to pay a little bit in commission, but you get access to the 2-cent stocks, the 3-cent stocks that spike big, it's worth paying a little bit. But shop around, again, speaking of worksheets, do a spreadsheet, break it down, make sure you've got the features you need, make sure you've got the access to the markets you need, and then look for that lowest price. And also, don't be afraid to ask. I've been surprised, especially if you've been at a broker for a while. This is a little tip that a lot of people don't know. If you've been at a broker for 5 or 10 years, it's kind of basic negotiations. You can do this with your cable bill too or whatever, but threaten to leave. You can also negotiate. Almost all brokers, other than the free brokers, will negotiate on pricing. So keep that in mind if you've been somewhere for a while. Next thing is, I know it's tempting. I know it's very, very tempting, but do not use your entire account, okay? Most brokers give you leverage. Most people max out their buying power every day. They're using leverage. And here's the thing. Leverage is awesome if you've got discipline, if you stick to your plan, if you've been trading for a while, but margin cuts both ways. And using all your buying power cuts both ways. The last thing you should do is if you're very new with that $1,000 account, you can't be maxing out your buying power. Because at the end of the day, your goal as a newer trader is to make good trades. And if you have that mindset where you're maxing out your account, maxing out your margin because you want to double your account in a week, you will almost certainly be one of the 90% that fail. The biggest thing by far the biggest reason there's such a high failure rate in trading is people don't want to play the long game. They want it now. Hell, they want it yesterday. Okay. And the market will, they always say either be humble or the market will humble you. And you have to approach this as something that you're going to be doing 6 months, 6 years, 60 years from now. Have that long mindset in mind and don't have that get rich quick. I gotta double my account next week, triple my account next month, because it's gonna decimate you. Focus on good trades, focus on percent gains. That's something I talk about in the Steady Trade team all the time. Listen, I don't care if you made $50 on a small account, if you made 50% on the move. If you bought a $1 stock, you nailed the entry right as it was breaking out on high volume and news and all these things we look for. And then you sold at $1.50 and then the stock crashes back to $1. You made 50% in a few minutes on a good setup in momentum land. Doesn't matter if it's $50, because over time, as your account grows, you can keep your exposure limited. That number will go up as your account grows, but you're also not risking that huge downside. Focus on percent gains, not getting rich today. Next thing is, do not use market orders. Something I talk about all the time is, you've got to avoid that fear of missing out, that FOMO, as we say. And I know it's hard with these rapidly spiking stocks, but keep in mind with a market order, at the end of the day, when you're using a market order, you're basically telling the broker, give me a terrible price. That's basically what you're telling them. And if you don't understand the differences between a market and a limit order, got a bunch of videos talking about it, where we focus specifically on the different order types. But at the end of the day, a market order is you're just raising your hand and you're saying, I can't wait. I want to get filled now. I don't care what price I pay. And the brokers, I always think of like this instant someone puts in a market order. There's like this greedy broker with devil horns. And he's like, yeah, we got one. Because they're just going to give you the worst fill in the world. You're going to get filled higher. You're going to top tick the stock basically. Then it's probably going to drop back to a level where you should have bought at, stops you out. Then the stock trends through the rest of the day as you watch it go up because you had FOMO and you couldn't wait for a limit order. Always, always, always use limit orders. And if you're unfamiliar with the difference, check out the archive. Next thing that a lot of people do not like, it's funny how many people dislike this, get up early and prepare. And listen, this is something I practice what I preach. When I was first learning day trading back in 2007 was when I first got interest really in depth, really, spending hours and hours a day. 2007, I had a business. I had 15 employees. I had thousands of customers. At that point, my kids were 5 and 2. So I had toddlers. I had a business. I had a lot going on, but I always got up early, ran my scans, ran my news. And here's the thing, whether or not I had time to trade or not, a lot of those days back then, again, I was running the business. I always built a watch list, always did it bright and early in the morning, always saw what the overall market was doing, always wrote down all my notes, and then I reviewed at the end of the day. And here's the thing, you might not like it, but listen, if you can't commit to getting up at 4 or 5 in the morning to put in your study time, again, you'll probably be part of the 90% that fail, because trading might be one of the most you might not want to hear this either. Trading might be the most difficult thing you ever try and do. And unless you're willing to put in the work, the time, and the effort, good luck. I mean, I appreciate you watching the video, but you got to put in the time. And I think the best way to do that, what my boy Jocko Willink says, is you got to be up before the enemy. And it's amazing. When you're up that bright and early, doing your work and grinding, it's like you got an edge. Because everybody else, all these other degenerate penny stock traders are all hungover and sleeping until 9:30. Get that edge. Next thing to do is focus on the best points of the day. I talk about these time windows all the time. I think it's such a undercovered point of how the time of day affects particularly day trading and momentum trading. If you're on the pre-market prep, you probably get sick of me talking about 9:45 and 2 p.m. Now, I'm not saying those exact times, they're windows, but I always talk about this kind of U-shaped action in the market. You've got, in the morning, you've got all this momentum into the 9:45 window. It's that best time to buy breakouts. It's that best time to even short sell. I mean, the biggest thing with like 9:45 is if a big runner in pre-market can't break out at 9:45, it's almost always going to die because all the momentum's going to leave. So 9:45 is great for going long on breakouts and shorting failed breakouts. I mean, my co-host partner, Steven Johnson, I think 90% of his trades are pre-10 a.m., and he's a short bias trader, and he's shorting those failed 9:45 moves. And then avoid midday. I talk about this a lot, and focus on that 2 p.m. window. That VWAP hold high at daybreak, by far my favorite pattern for newer traders, part-time traders, specifically if you have a small account, is that VWAP hold high a day. And those, we're targeting that 2 p.m. window. Avoid midday, avoid pre-market, avoid after hours, focus on the 9:45 and the 2 p.m. window. Last thing I would say is, get obsessed. Study. I mentioned it at the beginning of the video. We put so much out there. Check out the StocksToTrade blog. I mean, we've got hundreds of blog pieces talking about fundamentals, talking about watch lists, talking about technicals. I mean, it runs the gamut. The podcast, our YouTube, the pre-market prep, the twist. There's all this information out there. The Steady Trade team. Take advantage of it and become obsessed. Books. I constantly recommend books. Ultimately, you have to grind. You have to want it more than the other person. And like anything, I don't care if you're starting a restaurant. I don't care if you're an athlete. I don't care what it is you're doing. You have to love the grind. You have to get obsessed, and you have to be, you have to create that passion. I'm one of these people that, it's like follow your passion is that fairy tale that I don't think even exists. You need to create passion. Okay. I mean, if we all followed our passion, we'd all be chasing butterflies around, okay? Nothing would get done. You need to get obsessed and create your passion and immerse yourself in information. And if you grind and grind and grind for a year, 2 years, 3 years, then it starts clicking. Then you maximize your success. Then you can grow your account. Then you can go full time. And then, you can achieve the dream of probably most of you. You're probably watching this video because you're bored of your job, or you hate your job. You want the freedom that markets create, and you can do it. Anyone can do it. You don't need to be crazy smart. You don't need to be mathematical. You don't need anything. You need work ethic, and you need to create passion. And I think the best way to shortcut that is the Steady Trade team. If you watch these videos, if you listen to the podcast, I love this stuff. Love helping others learn, love trading the markets, love seeing people grow and achieve that dream. So if you're looking to cut that learning period down, still not going to do it in a month, still not going to do it in a week, but the Steady Trade team will shorten that path or shorten that timeline to success. And I love doing it and look forward to working with you.